Welcome back, ladies and gentlemen. If you are waiting for our next session, we are here, we are ready, we are about to start the next one. So, there are many factors that play roles in everyday movement of the financial markets, and one factor that all professional traders will keep their eyes on is the news. In this session, Trade the News, what actually moves the markets, and why almost everyone gets it wrong. Our esteemed speaker, Adam Batten, Chief Market Analyst at Investing Life Academy, will guide you through how news really makes markets move. And if everybody's ready, please give Adam a warm welcome.
Thanks for having me back. Thanks for the people who came back who were here with me yesterday. It's so lovely to be in Cape Town. I came all the way from Toronto, Canada for this presentation, and to be here. I'll be speaking now on Trading the News, and then in about a half hour from now, we're going to talk about a lot of things I believe that are happening in markets right now and things to watch out about. If you saw yesterday, there was a little bit on me. I'll try to get this thing working. Anyway, we'll do this presentation. I'll ramble on a little bit. We're going to talk about what really moves markets right now, how markets move. And the first point I want to make is that, we'll get the slides going in a second, is that markets move on expectations, right? So there's a lot of news, and you'll hear say, okay, unemployment is 20% in South Africa this month. And a trader will ask, okay, well, what was it expected to be, right? So, it could be going down, it could be going up. It's the speed and the expectations of how everything is expected to move that really does drive markets. So traders aren't just trading on the news, but where it's expected to be. And markets are looking in the long distance about and pricing in events. For instance, right now, the Iran war. You can see the market has sort of moved on past that and is pricing in the Strait of Hormuz opening again and oil prices coming back down. So you have markets pricing in a future, and sort of every day that might adjust. Right now, it seems it's coming to a conclusion. I hope it comes to a conclusion because it's been a very volatile time. It's been a tough event to trade. You have the U.S. side lying constantly, Trump tweeting about everything, that it's over 100 times now. The media on all sides, from Israel, from Pakistan, from Iran, sending out these conflicting signals about whether the war is going to end or whether it will continue. So, what are we expecting? Well, you can see how markets have moved ahead of the war, right? We've priced in an end to the war, and you see oil sort of rolling over down to this sort of 80, you could see 80, 75 dollar a barrel. And meanwhile, markets are looking at the rest of the world and saying, well, AI is going to change a lot of things. And AI is just in this incredible flux right now where it becomes very difficult to price in what we're expecting. Now, if we go and we talk about economic data, if you've traded on economic data, you'll see two things. You'll see a number, what's expected in terms of jobs. So say it could be 100,000 jobs created this month. And you'll see something called the economist consensus, usually beside it. And it'll say the economists were expecting 50,000 jobs this month. And that delta is often what moves markets. So if it's better than that 50 or it's worse than that 50, you'll see the dollar generally go up or go down based on that. And that's the important thing to remember about markets, is you can oftentimes get a sense of what's actually priced in markets from that consensus, and trade around those changes are what moves markets. And I talked a bit about it yesterday, but when I started in markets 25 years ago, almost now, it was a time when the algos hadn't really taken over. And you could see the pricing there, and you could react to news in like real time. So you'd have a news wire, you'd have a jobs report, and the guy who was my mentor at the time, he would just trade on the news. So you would get a report, 100,000 jobs instead of 50,000 jobs. He was selling bonds then. He'd sell bonds on that headline. And he was making $100,000 a day, just trading economic data. Simple, buy, watch the news, there it is, buy or sell, and all day, every day. You're waiting for like 2 or 3 headlines a day. Unfortunately, that era didn't last very long because of the, oh, hey, we got it working here now. Okay. That era didn't last very long. No, it's still not working here. We got another one? That era didn't last very long because the algos kind of took over. So things happen much more quickly right now. So here was a little bit about me. We had my introduction yesterday. I founded forexlive.com 15 years ago, which became one of the biggest Forex websites in the world, especially in terms of market moves and everything. And then there's just, I got 4 kids at home. Next is a dog. Can't decide on which kind of dog to get. I'm thinking golden retriever or Labrador. Probably be my wife decides, like everything. Love ice hockey. Right now we're into the finals of the Stanley Cup Championship, which is ice hockey. So I'm waking up every day and checking the scores on that. But I've been a trader. I was saying yesterday, I think I'm at the end of my trading career. It's been a good one. There are a lot of guys here that have tell you they've done very well. I've played the game for 25 years, and I'm at the end of the game. So we're in the end game here, and I'm going to share what got me to the end game in this presentation, what I'm thinking of for the last chapter in the next one. But enough about me. So this that's my desk actually at home. So what we do at Investing Live is we write about news in real time. So every day I'm probably liable to write 15 or 20 articles on news as it happens. Unfortunately, for the last few years, it's been a lot about like Trump. Trump's just tweeting on this. Here's what he said. Here's what he really meant. That's a very tough game to play. I remember when he first got elected, we were thinking, oh, well, I'll figure out Trump. We'll be able to trade around Trump. Extremely unpredictable. We'll talk a little bit more about that. But so what I have on my screen here, that's economic data up there. Would have what's expected, what's priced in, the tickers, every news service in the world. I just showing on those screens just our website. Bloomberg terminal, Reuters terminal, everything. And Squawk's going. You guys know what a Squawk is? It's a very valuable tool. They just yell out the news at you. So it's guys who are just quiet. They probably even have like more screens than that, because I know the guys who do it in London, and they just watch the headlines and they'll just say it if it's important enough or medium importance to you. So you just have a quiet office, and I have actually 2 of them going, and then they'll just yell out the news when it happens, so you never miss anything. You're ready, So you can see why I'm sort of reaching the end. It's been 25 years of very intense news, and even actually I'll show you this one too. So that's CNBC on that little TV there. And to show you how hardcore I am, they try to sell you now when you get like TV, or at least in Canada, it's always over the internet now. And because they don't want to run the cable to your house, or I guess it's just easier over fiber. But there's like a 5 or 7 second delay on your TV feed. So you're going to be watching live sports, but it's not quite live, like they sell it as live. Old school cable is still live, or like a 1 second delay. So I still have old school cable running to the house with the old school boxes, so I can avoid the 5 or 7 second delay. So like news trading is very much about that. And it's a tough thing to do unless you have those tools, but there are a lot of ways to be successful, and it is thinking about what's priced in all the time. What's priced in for central banks? What's priced in? And that has to be your thoughts at all times. Okay, what's really expected? This moved, okay, what was expected? What are we concerned about? Here's an example. A lot of what we do is economic data. So what's coming next? Fed Day right now. This is 2024. And the Federal Reserve had talked about cutting rates. This was the start of the last rate cutting cycle. We got through inflation. Inflation's coming down. Rates were at like almost 6%. And they had to cut rates slowly. And they came out and said, we're going to cut rates, and you can kind of see the dollar coming down there. And then they announced it, nothing big happened, right? Because it was priced in already. They signal these things. And then there's nothing. And then that's how markets sort of adjust ahead of time. Other ones, economic data. This is also 2024. Hot inflation, right? Hot inflation is going to push up interest rates. Central banks have to hike rates. And you have a lot of experience with inflation here in South Africa. So you're buying the currency usually on hot inflation, in a developed market anyway. So like I said, the print isn't the trade, the reaction is. Now, this is when it gets to the techniques you can use so you're not just trading against algos. Because I can tell you, you're either trading against someone like me, or you're trading against an algo when it's like live news. Is that the best trade is often to fade the first move. Markets, it's overcome with algos. Things spike quickly. It's generally, unless something is truly a game changer, the news trade that you want to do is to fade, so take the other side of any big spikes. So you see that work over and over again, is not get too excited about what's happening in the news. And I actually registered a domain. I was going to build a business just around, it was fadefear.com. And it was just a service that said, like, it's too much. So this was like 10 years ago or so. There was this Ebola outbreak, kind of like there is now. Everybody freaking out about it. Markets started to sell off. And it was like nothing, right? Same as it is now. So you fade the fear. Whenever you see, fear is like the most fundamental human emotion, right? It's like an animal emotion. It's everything that we have deep inside of us. So when you see fear sort of grip the markets, that's when you should tune in and say, listen, I need to be on the other side of this. Occasionally it's valid, like in wars, but if there's a panic over something you think isn't going to change the world, even COVID ended up, the trade was to fade it at the end or from the bottom. I mean, March 2020 was just the craziest time. And to stand out there and fade that is very difficult, but you didn't need to be there at the very bottom, right? If it was April, May, June, even after that, even till now almost, fading it was a good one. Here's another example, still 2024. This was the first time Iran and Israel started firing at each other. The market kind of freaked out a little bit. And generally you can fade these things. Even this last war, you could fade it. This was sort of an overnight trade. They were shooting missiles at each other. Eventually it turns out it was just quadricopters. It was just a little bit of posturing and everything else. We sort of learned later that it would escalate, but at this time, you're just looking for these things to fade, these spikes, to fade over and over. And again, like you're going to see the headlines over and over in the newspaper. This is scary. This is going to be a panic. Like in the grand arc of history, nothing moves the market that much. There are maybe 5 events a decade that you really need to freak out about. So they're trying to sell fear, and you have to be able to avoid it. Now, one of the things you don't want to fade is the central bank, right? So when a rate hike comes and it's a big surprise, and I think we're building towards this now. The U.S. has a new Federal Reserve chair. So the U.S. is going to set a new set of policies around interest rates. And we don't know what he's going to be like yet, because he's sort of said one thing, that he's going to cut rates because Trump wants to cut rates, but now he's got the job and he's going to have to fight inflation. So we're waiting for his first comments. And the market is now priced in, the Fed maybe even hiking rates this year, at the end of the year. Yesterday, the European Central Bank hinted that it's going to hike rates. We're starting to see an inflation problem. And if they get sort of behind the curve and inflation gets out of control like it did in 2022, then they're going to have to hike more, and then there'll be surprises. And so when you see these surprises from central banks, especially on moves or big signals, those are the ones you go with. So that's the news technique on that. And it's like I say, don't worry about, on a move like that, don't worry about missing the first cent on a currency or the first move or the first day or two's move. Those are the moves that last for 2 or 3 weeks. And you try to get in good, and hang on for dear life, right? When you get in a trade like that, don't try to make like a little bit. Try to make a lot. It's interesting. Sometimes central bankers, we're getting a little more into the weeds here, will say a lot of things to move markets, especially when they're worried about inflation. They're going to talk really tough, and then when it comes down to it, they hike less. This was a bluff from the Bank of Canada, and this will be an interesting one as we get inflation again. There's going to be a lot of tough talk, but it's like a Formula One driver coming into a curve. As they talk, and then they hit the brakes and curve. So they wait till the last minute to actually signal what they're going to do, and they'll do less when they're hiking rates. It's oftentimes the opposite when they're cutting rates. Okay, I love that picture. It's crazy. They have trains like that in like India or wherever that is. One of the edges you can get in trading news is to look for positioning, and to try to get a sense of how everyone in the market is positioned. Because things get crowded, especially in this sort of media era we live in now, where every message is getting repeated and amplified and spread, and everyone's writing the same thing. Whether it's AI right now, like everybody's piling into the same trade. And the consensus becomes it's going to grow, it's going to grow, it's going to grow. And once everyone is in and everyone's on side, that's when it can fall the other direction. So how do you tell when that is, right? Like, because it works until it doesn't, and then the bottom's going to fall out, which is sort of like the AI trade right now. And you can see it a lot of times in currencies, in the way something will move on news. So what you're looking for is if the news stays the same and the market doesn't trade the same, right? So you have the US dollar, you can see it rising here. Strong economic data, and then you start to get towards the top here, the data keeps coming in strong, but it doesn't go up anymore, right? You can see this sometimes with a stock. They report on earnings beat, and the stock doesn't go up, right? Like, so when things aren't you don't get that same market reaction, and it doesn't keep going up. And then we got one piece of economic data, was like ISM, just missed by a bit, right? So good news doesn't move it, and then you get some little bit of bad news, and then it starts to fall hard. Well, you can see in that sense, without knowing, that everybody's already in the trade, right? It's overcrowded. So when the news doesn't move the market the way you think it should, you should be perking up and using that to trade the news, and then you'll see it come the other way. And again, this wasn't something you had to get into on day one. Like these things last. A lot of the trends with news trading is not to trade and hope to make, unless it's some massive headline, to make that much money in one day. You've got to understand positioning and try to position for trades that can last for a while. Again, headlines, they start getting repeated all over. Iran war couldn't be a better example. Trump says the war is ending. Like, the war can only end like so many times. We're going back to the war. Headlines start getting repeated, and they don't move the market as much anymore. So if you're using the same playbook over and over, and people try to teach you to trade and say, well, just buy when this happens. But if it happens 5 times in a row, the market figures it out pretty quickly. There's an obvious example is the tariffs with Trump as well. Talking about tariffs, and then the taco meme started with Trump always chickens out, and he was, talking tough on even Iran right now, right? Like the market say, oh, I'm going to bomb Iran again, it's going to be radioactive, and the market doesn't even move now. So they say, well, Trump always chickens out. So you can only do it so many times, and the market figures it out pretty quickly. So you're watching how the market's reacting to these different threats. So tariffs was the one before, war is the one now. And the lesson here is right here about Trump. And this was what we wrote at the end of his last term, at the start of this term, is that Trump measures himself not even by approval ratings, by the stock market. And just yesterday, he tweeted out like a rocket ship, like the one I had on the other slide, and it said, have you checked your retirement lately? Like, he ultimately only cares about the Dow Jones Industrial Average. And he measures himself by it, so any stupid thing he does, he'll try to get out of it if it makes the market go down. So what does that tell you? The market's going to go up. He'll use everything he can, ultimately, to push the market up. And that's it. So whenever he does something to wreck the market, especially the bottom of the Iran war, the market's like, if the market goes down 10%, Trump will pull out all the stops to make it go back up. So that's the lesson for the next 2 years. What do we got here? Okay, here's a question to ask yourself. When you're positioning yourself for a trade or you believe in something that's happening in the news, is to always ask yourself, what if I'm wrong? And I do a lot of interviews with other people and even central bankers. And if you ask them sometimes, it annoys them a lot. They'll say, well, inflation's coming down. And you say, well, what if you're wrong? And it irks them. These people don't like to be challenged and said, well, what if you're wrong? How will we know when you're wrong? What will you do when you're wrong? And they get angry at the question almost because they don't like to contemplate the idea, what if I'm wrong, right? You're always trying to build this conviction. But you have to ask yourself that in markets. What if I'm wrong? Well, how will I know when I'm wrong? And try to make some benchmarks. And that's a lot of times if you're news trading, it's not always about the levels, especially if you're thinking in the longer term. You say, well, what if I'm wrong? What if I think Trump really does care about the Dow Jones Industrial Average is all? But, well, what if I'm wrong? What should we look for in that? It's tough with him because he's an insane bluffer. And he'll say, I just care about peace in the Middle East. You have to have confidence that he will. But, again, always ask yourself, what if I'm wrong? And that's like a stop in markets. Okay, so quick recap. Again, set expectations. Really want to fade fear. And I think that's the ultimate alpha that you can get from this talk, is look for fear in markets. Look for euphoria as well. Euphoria is a little harder to spot because things can keep going up. But recognize when you see everybody saying, like, everybody's going to die in COVID. Like, I'm building a bunker, right? Like, that's the bottom, usually. If they say AI is, there's going to be 100% unemployment on AI, that maybe things have gone a little bit too far. And you see it from people you talk to. It's the conversations I have here. It's the conversations I have everywhere. When you get someone saying, I remember, this is way back in the .com. He was so skeptical. Everyone was so skeptical of .com and the internet. And then this guy who was so skeptical, he came to me. He goes, he was a British guy. It's a new paradigm, Adam. It's a new paradigm. It's going to change everything. And this guy was so skeptical. Then he finally bought in. Of course, that was the top. He got cleaned out, piling in at the top. So look for those signs of people, whether it's like your mother or your grandmother telling you to buy Bitcoin, right? You remember that time near the top of Bitcoin? Like, everybody's in. There's no one left to buy at that point. So fade those sort of things, and then you'll see one little thing goes badly and it goes wrong. And you can see that even on crypto right now. The Trump administration gets elected, Bitcoin's pretty high, it jumps, and it just becomes like the headline after headline. They're going to build like a national reserve. They legalize everything about Bitcoin. We can't get to new highs, even on like good news after good news after good news. If you can't get to new highs on good news, how are you going to get to new highs, right? You're going to get some bad news at some point. There's going to be another election, someone less friendly. So those are the ways to trade on the news. And I think this is my antidote to making bad trades, is to remember, you're going to miss so many trades. Listen, 25 years of watching headlines. You wouldn't believe how many trades I missed. I was talking about some yesterday. They eat you alive, the trades that you miss. But if you get in the move where you got to chase the next headline, no, I got to trade this Trump-Iran war, I should have known he was going to chicken out, blah, 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 you'll make a bad trade. Trump will do something stupid again. There'll be another opportunity to buy the dip. Just wait, stay in the game. There's always another trade. You're going to feel this revenge trade, all these traps that traders get into. So let's do some questions. We have another presentation. It's going to be a really good one in not even 10 minutes from now. I'm going to talk about a lot of things I believe in right now. The conviction, how to develop deep conviction, because I think the antidote to bad trading and the antidote to making a lot of money in markets is developing a deep, deep conviction. And I'll share some of the convictions I've had in the past, the talk that I did here a couple years ago, and the things I said were my convictions then, and I'm going to do a scorecard. We're going to do a report card on what I said then and if I was right and if I have any credibility, and you can judge for yourselves. So, any questions on trading the news? My man Calvin over here at 2.
Thanks for the presentation, Adam. I just want to ask with regards to fading the news. So do we trade, do we become contrarians? Do we wait for the top? Then once it reverses, do we like a bullish engulfing or bearish engulfing, and then we get in after the move?
Yeah, that can give you a lot of conviction, right? So we didn't talk about technicals in this talk, but they're important.
Okay.
I mean, you look for... A lot of times they can like add to your conviction or let you know the sentiment of the market. So you'll see, again, so you see that rising market, right? And you get good news, good news, good news, and it'll sort of flatten out. And then you'll get bad news, and you'll get this bearish engulfing candle or something like that.
Yeah.
Usually, I'd like to see it on a daily candle, right?
Oh, okay.
And then even a little bit of follow through from there. And then you'll see, right? And you get this confirmation from the market. If it can stall out at a level that's important.
Okay.
And that can again, ultimately, at the end of the day, you have to set a stop somewhere.
Yes,
and it can give you some lines to trade against.
Okay.
So yeah, a bearish engulfing candle, a bullish engulfing candle, huge signal in terms of confirming what you're seeing from the news. Because you'd like to see that confirmation in the price action and in the market.
All right. No, thanks, Adam. All right.
Hi. I just want to ask about the AI market, the AI bubble.
Yeah.
What is your conviction on that?
Yeah, well, I'm gonna talk a lot about it in the next presentation. So, but I'll spoil it right now, some of it for you. I mean, it's a game-changing technology. The valuations are insane, right? Or really, the CapEx is insane right now. The amount of money they're spending, it's truly, truly something else. But it is an incredible technology. It is going to change things. In general, my view, I hate to spoil the next talk, but we'll get deeper into it then, is these things take longer to unfold than people think. I think ultimately it's going to crush a lot of jobs, but the timelines are always longer. So it lasts longer than you think it's going to last. And right now we can see the momentum is still there. And like if your terms of trading the news, you can't fade a trade like that. You absolutely cannot fade a market that's going up like this. Like it keeps going always way, way, way beyond where anyone thinks is rational. Micron was a little computer chip company. Today it hit a $1 trillion valuation. It was up 20% yesterday. It's been up like 20% every day for a year. It's up like 350% in a year because they're just throwing money at it. Like Mark Zuckerberg at Facebook is totally losing the AI war. He's just like, the guy just keeps throwing money at it. And so in something like that, where you have the richest people and the richest companies willing to spend as much as they have or they can possibly acquire, I mean, you absolutely can't fade something like that. But we'll get more into it. I've got some cool charts and love to talk about AI. And I'll show you what I was saying right from the beginning, so I think it adds a little bit of credibility.
Thank you.
So hopefully you can stick around for that.
Thanks for the presentation. I think his question was, what do you mean by fading? What do you mean by fade? Because I also wanted to know that. But my question is, where do you look to get an idea of customer sentiment from the market? Like, where are you getting your information from?
Yeah, I think, okay, that's a good question. It's three things, really. And I think, number one, it is really neat to talk to people. Like, it's better to talk to bad traders sometimes than good traders. Because they'll tell you, I play hockey, like I said, ice hockey. And the other day, there was this like old timer in the room. I don't know, he's like a realtor or something like that. And he was telling everyone to buy NVIDIA. And I was like, oh, that's a bit of a red flag, right? Like when you got regular guys who never talk about stocks, telling everyone to buy a company, it's like, that's probably near the top, right? Or at least a short-term top. So you're trying to get those everyday sentiment things can be valuable. Number two is you're looking at mainstream news, right? One of the things about gold, I was very bullish on gold for a long time because gold was hitting record highs at 3,000, 3,500, and it still wasn't on CNBC. Like it wasn't on financial news. There's sometimes when Bitcoin was hitting highs at 100,000, like, man, every second guest on TV was Bitcoin, Bitcoin, Bitcoin. But gold was hitting new highs, and they weren't talking gold, 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 gold. So that gave me the sense that, like, well, not everyone's in on this yet. When a market gets really crowded and it's hitting new highs, like it's all anyone wants to talk about. And when it's every second segment is on gold, like, and silver started to get like that. Like if you remember silver when it was hitting 100, 120, like man, now every segment's about silver. Like retail's probably piling in here at the top. The third one is online. Like Twitter is pretty useful for gauging sentiment. Reddit, any sort of chat rooms where if you have sort of a baseline that you can judge against. And then you see, wow, everybody's talking about this one thing. And you saw that with kind of things like GameStop and whatever. And the interesting thing about modern trading is it seems it can go a lot farther than it used to, right? So you can gather, it's like easier for people in South Africa than ever to trade. So it used to just be like US people and they drive it to one thing, but now everybody in the world can access the US market. So you have people from all over the world piling into GameStop or whatever, but ultimately becomes saturated. And so you're trying to find out when that is. Again, it's tough to call the tops. Like, don't buy puts on these things. And a lot of times the bottoming signals are worse when everyone hates. I remember the very bottom of oil, and it's some of my best trades ever have been oil. It was Jim Cramer on CNBC. And there's all these memes about Jim Cramer. When he says, like, I'm buying it, it's like the death knell. And it was him saying, I'm never buying an oil company again. Oil is dead. Oil is over. Sell Exxon. Exxon was trading at zeroed out, the biggest oil company in the U.S. And oil was at, I don't know, $30 or $35 then, and it was the absolute bottom, right? And he was on TV. I remember once, another one was a really good one. It was Facebook when it was really struggling. They changed their name to Meta, and they was making the metaverse. Remember Zuckerberg he was losing that battle too. And Jim Cramer came on, and he was almost in tears, telling people he regretted ever recommending buying Facebook, right? And Facebook was down to like $80 then, but it was trading it still at like 5 times free cash flow. Like they were still making a lot of money, but he was crying, saying, I regret, literally almost in tears. And you think, man, this guy on TV is like crying, this has to be the bottom. And it went from 80 and now it's at like 600, right? So whenever you see that sort of sentiment from something like that, you have to be able to take the other side of that trade and make fun of Mark Zuckerberg while you're at it. He seems he's going to lose the AI war too. So we'll take a quick break there. We'll be back in like 7 or 8 minutes, and we'll get into the next one. I hope you stick around for that, because I really want to get into some of my most exciting ideas. Cheers.